Right. So, hello, good morning. So, we will start with the first chapter of the book. Actually, we haven't tackled this chapter, well, in total, but I will discuss here in my presentation. So, this is the general concepts. This also include Philippine banking law. Okay. So, we'll start with finance and financial intermediaries. So first we have to define what finance is. So finance means to supply funds or provide capital, loan, money as needed to carry on a business. It may be derived directly from other persons or through financial intermediaries. So when we say financial intermediaries, these are banks, quasi banks, pawn shops. We will learn that in the next slide. Okay, so here is the BSP or Bangko Sentral ng Pilipinas definition of financial intermediaries. Okay, so financial intermediaries as per Bangko Sentral are entities whose principal functions include the lending, investing, or placement of funds or evidences of indebtedness or equity disposed with them, acquired by them, or otherwise coursed through them. So there are two types, which are the banks and the non-banks or the non-bank financial intermediaries. So the non-bank includes insurance companies, financing companies, credit loan associations, mutual companies, investment houses, lending corporations, pawn shops, and quasi-bank institutions. Okay, so now we have here financial market. So financial market is a platform system where buyers and sellers come together to trade financial securities, commodities, and other assets. So its purpose is to connect those who have excess capital with those who need capital. So usual financial markets, banks, uh, well, as per it stated, it connects investors with those who need capital, such as borrowers or businesses. Or this is the purpose of this, or for investors to gain money through interest that they imposed on the borrowers and businesses. Okay, so kinds of financial intermediaries. So we have a table here. So for the types, we have the banks. So banks are the largest types of financial intermediaries. Second is the lending companies. So lending companies grant loans from own capital or funds sourced from less than 19 persons. Savings and loan associations are non-stock, non-profit, and accumulate savings of members for loans. And financial companies extend credit facilities via direct lending, discounting, factoring, and financial leasing. And then pawn shops lend money on personal property delivered as security, and quasi banks borrow funds through insurance, endorsement, assignment with recourse or acceptance of deposit substitutes for relending. Next, so the concept of credit transaction. So we have here the definition of a credit. So a credit is a financial accommodation, provision of a benefit, such as cash, land, goods, services, for which payment is to be made on a later date. It's based on trust, belief, and confidence. So like your credit card, um, payment is always made in later date. You could always borrow the money uh, on hand, and the banks will just trust you to pay the money later or on your due date. And under the Truth in Lending Act, this is Republic Act number 3765. Credit broadly includes any loan, mortgage, deed of trust, advance, discount, conditional sales, contract, contract to sell, rental purchase contract, bailment, lease, lien, pledge, or any transaction having similar purpose or effect. Okay, let's move on. Okay, so we have here the kinds of credit transactions. So we have here the principal contracts and the accessory contracts. So the principal contracts are usually loans and deposits. And usually the principal contracts of these accessory contracts are usually loans such as guarantees, suretyship, real estate mortgage, personal property security, and anti-crisis. Usually loan is the principal contract for these types of credit transactions. Okay. So we'll move on. So the key characteristics of these credit transactions. So what we have here, so these are created by will of the parties. So these are by consent, object, and consideration. These are the main factors of a contract in on obligations and contracts. And um, we have here this exists by operations of law, necessary deposit. These create real rights, and others create personal rights. It could be onerous or gratuitous, um, comodatum, and bailments fall under the broad concept of credit transactions. And then we have here banks. So the definition here, so these are entities engaged in the lending of funds obtained in form of deposits from 20 or more persons. A bank must be a stock corporation under Section 8 of the General Banking Law. And the Supreme Court said here in Republic versus Security Credit and Acceptance Corporation, a bank is a moneyed institute funded to facilitate the borrowing, lending, and safekeeping of money and to deal in notes, bills of exchange, and credits. So under Section 64, no person, association, corporation may advertise or hold itself out as a bank, quasi-bank, trust entity, or savings and loan association without proper authority. So there must be a proper authority for a bank to be an entity. Okay. So it must follow the strict rules. So basic functions of banks. So the first function is deposit function. The second function is a loan function. So the additional functions here are payment functions such as drawing checks, issuing managers, cashiers, travelers checks, demand drafts, telegraph transfers, e-money, letters of credit, and then other functions such as quasi-banking, safety deposit boxes, investment house functions, allied non-allied financial services, financial agent, buying and selling securities. But their main functions are deposits and loans. And we will tackle here the definition of quasi-banking. So for quasi-banking, so borrowing of funds through issuance, endorsement, or assignment with recourse or acceptance of deposit substitutes for purposes of relending and purchasing receivables. So for universal and commercial banks, they may exercise quasi-banking without prior authority, and other banks must secure prior monetary board authority. Okay, and we'll proceed. For the nature banking business, so first, banking business is affected with public interest. The general banking law recognizes the fiduciary nature of banking, requiring high standards of integrity and performance. Banking is subject to reasonable regulation under the police power of the state. Second, it must be with utmost diligence. So banks must exercise utmost diligence, higher than a good father of a family, in handling deposits. The Supreme Court has even imposed extraordinary diligence in some cases. So it must be performed with utmost diligence, not just an ordinary diligence. For the scope, the duty of utmost diligence extends beyond deposit handling to all transactions where banks act in a fiduciary capacity, processing loan documents, assisting in securing foreign demand drafts. So here's an exception. In Reyes versus CA, The court held that the highest degree of diligence applies only where banks act in their fiduciary capacity as depositary, not in purely commercial transactions without fiduciary relationship with depositors. Okay, so we'll proceed. So, in the nature of banking big business, so strikes and lockouts. So, banking industry is declared indispensable to all national interest. Any strike, lockout, unsettled after 7 calendar days shall be reported by the BSP to the Secretary of Labor, and the President may intervene and assume jurisdiction over labor disputes involving banks. Okay, so for banks, so their authority to operate. So banking slash quasi-banking corporation cannot be incorporated without BSP authority. So articles of incorporation filed with the SEC must be accompanied by BSP favorable recommendation. So they cannot operate without a certificate of authority from BSP. So not only with the SEC, but banks also have to have the approval of the BSP for them to be ever called an entity or be incorporated. And then operating without authority subjects officers to criminal prosecution and may result in revocation of articles or of incorporation. So we have here the kinds of banks. So we'll go over the meaning of each bank or what these types of banks function. But first, we'll enumerate them. So we have here the universal banks, and then we have the commercial banks, and the thrift banks, rural banks, cooperative banks, Islamic banks, and other banks. So we have here the universal bank. So the universal bank is the most complete type of bank because it can do anything or everything a commercial bank does, and even more. Besides accepting deposits and making loans, it can invest in other businesses, own shares in other financial institutions, and help companies raise money by selling securities. Examples include large banks that offer almost every financial service. So I guess one example would be BDO. BDO offers car loans, deposits, savings. You could also invest. I think BDO also has more of stock brokerage option if you want to invest in stocks as well. So also Metrobank. Metrobank also does the same thing: car loans, savings, deposits. First Metrobank securities for stocks, brokerage, etc. Okay, next. Investment house. So an investment house is a company that helps businesses and government raise money. It does this by selling stocks or bonds to investors called underwriting securities. Unlike regular banks, its main job is not taking deposits, but helping others obtain funding. And we have commercial banks. So commercial banks, given all powers necessary to carry out commercial banking, include accepting drafts and issuing letters of credit, discounting, negotiating promissory notes, drafts, bills of exchange, accepting and creating demand deposits, receiving other types of deposits and deposit substitutes, buying and selling foreign exchange and gold, silver bullion, acquiring marketable bonds and debt securities, and extending credit subject to monetary board rules. And then we have cooperative banks. A cooperative bank is owned mainly by cooperatives. So cooperatives have members, members fund cooperatives, and through the members funding, cooperatives actually gain more funding to invest under um, duties or main points or main services as cooperatives. Okay. So it provides loans, accepts deposits, and offers other banking services, but also serve as the general. It also serves the general public. So its main goal is to support the financial needs of cooperative organizations. Okay, so next. So rural bank. So rural bank is a bank created to help uh, people living in rural or agricultural areas. So it provides affordable loans to farmers, fishermen, and small business owners who may not have easy access to larger banks. So its purpose is to improve the economy and development of rural communities. And then we have thrift banks. So thrift banks, I think one example is PS Bank. PS Bank is a thrift bank. China Bank, so governed by RA number 7906. So Thrift Banks Act of 1995. So this includes what the thrift bank does. Include savings and mortgage banks, private development banks, stock savings, and loan associations. So the purposes, so thrift banks accumulate savings of depositors and investing them in real estate, chattel mortgage, bonds, securities. Second, they provide short-term working capital and medium long-term financing to agriculture services, industry, housing. And third is providing diversified financial services for small, medium enterprises and individuals. Okay. So digital banks. So I guess it's the newest one. We have GCash, Maya, GoTime, but I guess GoTime and Maya are PDIC insured. So what a digital bank is, a digital bank is a bank that operates completely online. So you don't need to visit your physical branch, so you can open an account. So you just use your phone, then open an account using your phone number, and then put digital money inside. So you could open an account, transfer money, pay bills, and apply for loans using the mobile app or website. So everything is done electronically, making banking faster and more convenient. Okay, next. So we have the foreign banks. Okay, so for foreign banks, so the governing laws here are Republic Act number 7721. So this is amended by the Republic Act number 10641, the Foreign Banks Liberalization Act. And then PD number 1034, so the Offshore Banking System Decree. So these are the two governing laws for foreign banks. So the modes of entry. So acquiring, purchasing, owning up to 100% voting stock of an existing bank. So they must first purchase voting stock of an existing bank in the Philippines, investing up to 100% voting stocks of a new banking subsidiary incorporated under Philippine laws, and establishing branches with full banking authority. Okay. So conditions for entry. So first, only established, reputable, and financially sound foreign banks allowed. So I think one foreign bank that I know here in the Philippines in is JP Morgan. JP Morgan is a very reputable foreign bank, so that's why they are able to establish banks here in the Philippines. So uh, they actually passed the first condition. So the second is it must be widely owned and publicly listed in a country of origin, unless government owned and controlled. Monetary board shall ensure at least 60% of resources assets of the entire banking system is held by domestic banks, majority owned by Filipinos. So, for summons and legal process, in case summons to be served to the bank, to the foreign bank, service made to the Philippine agent or head of the foreign bank designated to accept service of summons in his absence of the agent, Banco Central, deputy governor in charge of supervising and examining departments, may serve, may be served. Okay, next. Applicable laws. So foreign banks are bound by the GBL and other Philippine laws applicable to banks of the same class, except matters on creation, formation, organization, or dissolution of corporations. So fixing on relations, liabilities, responsibilities, or duties of stockholders, members, directors, or officers to each other or to the corporation. So these are governed by the law of the foreign banks, country of incorporation. Next. So revocation of license. So the monetary board may revoke the foreign bank's license if it is found to be insolvent and imminent danger of insolvency. Its continuance will involve probable loss to those transacting business with it. And after revocation, if it's unlawful to transact business unless license is renewed or reissued. So the BSP will take necessary action to protect creditors and the public. Next. So financial rehabilitation and insolvency. So in here, the Financial Rehabilitation and Insolvency Act of 2010, or the FRIA, officially Republic Act number 10142, is a Philippine law that provides a legal framework for helping financially distressed individuals and businesses either recover from financial difficulties or close down in an orderly manner, or by liquidation. It was enacted after it lapsed into law on July 18, 2010, replacing the old insolvency law of 1909. Its primary goal is to balance the interests of debtors and creditors by promoting fair, transparent, and efficient procedures for resolving financial distress while preserving viable businesses whenever possible. If the company can still recover, FRIA allows it to undergo financial rehabilitation, where the court approves a rehabilitation plan that gives the company time to reorganize its finances, continue operating, and eventually pay its creditors. If recovery is no longer possible, FRIA provides liquidation, where the company's assets are sold and proceeds are distributed among creditors according to the priority established by law. Okay. Next, so we have the main objectives of FRIA. So to sum it all up, it gives financial distressed debtors a chance to recover if rehabilitation is feasible, protect the rights and interests of creditors by ensuring fair treatment, preserve jobs and businesses whenever possible, and provide an orderly and predictable process when liquidation is necessary, and promotes stability and confidence in commercial transactions. Right? So who is covered? FRIA generally applies to individuals, sole proprietorships, partnerships, corporations. However, it does not apply to banks, insurance companies, pre-need companies, and certain financial institutions which are governed by special law. Okay, so I guess we are almost in the last part of the topic, which is the governing banking laws here in the Philippines. Okay. So first we have here RA number 7653, so the new Central Bank Act. So created by Bangko Sentral ng Pilipinas, is an independent central monetary authority. So the primary objective is to maintain price stability, conducive to balance and sustainable economic growth. So other functions, so to formulate monetary policy, supervise and regulate banks and quasi-banks, issue Philippine currency, manage the country's international reserves, preserve the stability and convertibility of the Philippine peso, serve as a banker and financial advisor of the national government. So the Monetary Board exercises the powers and functions of the Bangko Sentral, and the Bangko Sentral enjoys physical and administrative autonomy, allowing it to perform its functions free from political interference. So the government may not interfere with any of the functions here. Okay, so we have here, it was already mentioned a while ago, a few slides a while ago. The RA number 8791, the General Banking Law. The General Banking Law establishes the legal framework for how banks are created, managed, and supervised and regulated. It ensures that banks operate safely and prudently to protect depositors and preserve confidence in the financial system. The BSP, through the Monetary Board, oversees compliance with banking laws and regulations and may take corrective actions against banks that become unsafe and unsound. So the BSP supervision exercises supervision over banks, quasi-banks, and trust entities. So the banks classified under the general banking law are universal banks, commercial banks, thrift banks, rural banks, cooperative banks, Islamic banks, and other classifications determined by the monetary board, right? So, for the organization of banks, so banks may be organized only upon compliance with their BSP's requirements, including minimum capital and licensing. Bank operations, the law regulates deposits, loans, investments, branch expansions, trust operations, conservatorship, receivership, and liquidation. So, for the protection of depositors, the law promotes the safe and sound banking system to protect the interests of depositors and maintain public confidence. So, basically, the general banking law is mostly made to regulate bank how the bank is made, how the bank is incorporated, bank transactions, how much uh, how much the deposits, the loans, the whole overview of what the bank does. Okay, so that's my take on the general banking law. Okay, so now we have here um, RA number 3591. So this is the PDIC law slash charter. So this is deposit insurance. So this is created by the Philippine Deposit Insurance Corporation in 1963. So the purpose is protect bank depositors, maintain confidence and stability in banking system, deposit insurance coverage for the PDIC law. So before it was 500,000, but now it is 1 million per depositor per bank. So this is the current maximum coverage, and it applies to the depositors' total deposits in the same right and capacity in one insured bank. So membership. So all banks operating in the Philippines are required to be members of the PDIC. The functions of the PDIC ensures bank deposits, examines and investigates banks as authorized by law, and acts as a receiver and liquidator of banks ordered closed by the BSP. So here, what actually triggers PDIC insurance? So it's only payable when the bank is ordered closed by the monetary board, not simply because a bank is experiencing financial difficulty. Okay, and here for the next law, so this is RA number 1405. So this is law on secrecy of bank deposits. So the bank secrecy law prohibits banks and other employees from revealing information about the depositor's account. So disclosure is allowed only in the limited instances expressly provided by law or by subsequent special laws, the Anti-Money Laundering Act. Okay. Exceptions under RA number 1405. So written permission of the depositor. So cases of impeachment upon order of competent court in cases of bribery or dereliction of duty of public officials, and when the deposit is in subject matter of litigation. So in these exceptions, the bank may disclose any transactions that may be found very illicit. Okay. So next, we will proceed to the Anti-Money Laundering Act. For the Anti-Money Laundering Act of 2001, so money laundering is basically a process to make illegally obtained money appear to come from illegitimate sources. So AMLA combats this by requiring financial institutions and other covered persons to know their customers. So this is KYC, to maintain transaction records and report certain transactions to the AMLC. So the AMLC may investigate suspicious transactions and with the proper authority inquire into bank deposits despite bank secrecy laws. So the key obligations for anti-money laundering, so banks and other institutions must conduct a know your customer and customer due diligence, must keep customer and transaction records, and report covered transactions exceeding the threshold prescribed by the AMLA, AMLC regulations, suspicious transactions with unusual or suspicious circumstances regardless the amount. Okay. So next is the Islamic Banking Act. So for the Islamic Banking Act, which is RA number 11439, so the Islamic Banking Act of 2019 established the legal framework for Islamic banking in the Philippines. So it allows the establishment and regulation of Islamic banks which operate under the Sharia law. The law aims to promote financial inclusion, attract investments, and develop Islamic finance industry under the supervision of the Bangko Sentral. Under conventional banking, Islamic banking prohibits the charging or payment of interest. Instead, Islamic banks earn profit through asset-based financing, trade, leasing, and profit sharing arrangement. So mostly they don't do what traditional banks do, which is charging or payment of interest. So I guess that's one very specific factor about Islamic law, which differs them from the regular banks that we have here. And the BSP regulates Islamic banks while a Sharia supervisory board ensures that their products and operations comply with Islamic principles. So here we have the characteristics. So no interest, transactions must comply with Sharia principles, the financing is generally asset backed and based on risk sharing and investments in prohibited activities. And regulations, the BSP supervises and regulates Islamic banks, and Islamic banks are subject to prudential standards similar to conventional banks, except where inconsistent with Sharia principles. So in Sharia governance, Islamic banks must have the Sharia Supervisory Board. This body ensures that the bank's products and operations comply with Islamic law. So who may engage in Islamic banking? So Islamic banks established under the Act and existing domestic and foreign banks may offer Islamic banking services upon obtaining the necessary authority from the Bangko Sentral. Okay, so next is the Rural Banks Act of 1992. So RA number 7353 is amended by RA number 10574, governs establishment, organization, and operation of rural banks in the Philippines. So the law aims to promote rural development by providing accessible banking, credit facilities to farmers, fisher folks, cooperatives, micro, small, and medium enterprises, MSMEs, and other rural communities. So rural banks operate under the supervision of Bangko Sentral. So the amendment by RA number 10574 increased the authorized capitalization of rural banks, allowed qualified foreign banks and foreign-owned entities to own up to 60% of the voting stock of rural bank subject to BSP approval and applicable laws. So it strengthened the rural banking sector by encouraging additional investment. So mostly these could be found in the rural areas. Mostly this bank is for for the for the farmers, fisher folk, manggagawa. Ayun. Okay. So next, RA number 7906. So we have a Thrift Banks Act of 1995. So RA number 7906 governs the organization, operation, and regulation of thrift banks in the Philippines. It aims to promote savings and provide accessible credit, particularly to customers, small businesses, housing finance. Thrift banks are supervised and regulated by the Bangko Sentral. So we have types of thrift banks. So we have savings and mortgage banks, private development banks, stock savings, and loan associations. So for the functions of thrift banks, thrift banks accept savings and time deposits, grant loans and other credit accommodations, finance residential housing, and provide investment and other banking services as authorized by the Bangko Sentral. Next, we have the Philippine Cooperative Code of 2008. Okay. So RA 9520, which amended RA number 6938, the Philippine Cooperative Code of 2008. So it governs the organization, registration, operation, and regulation of cooperatives in the Philippines. It also contains special provisions on cooperative banks, which are established to provide financial and banking services primarily to cooperative organizations and their members. So cooperative banks are supervised by the Bangko Sentral, while cooperatives are generally registered and regulated by the Cooperative Development Authority. So the CDA is where the cooperative banks mainly registered. But in terms of their financial transactions, Bangko Sentral still regulates cooperative banks. Okay, next. For the regulation, yes, CDA registers and regulates cooperatives, while the BSP supervises and regulates their banking operations. So, for organization of cooperative banks, they may be organized by duly registered cooperative organizations. They requires authorization from the BSP before registration and must comply with capital and prudential requirements prescribed by the BSP. So functions of cooperative banks, so they accept deposits, grant loans, and credit accommodations, provide other banking services authorized by the BSP, and primarily serve as cooperative organizations. Primarily serve cooperative organizations and their members. Okay. Right. So we move here to the final parts. Just example bar questions. So bar exam, problem number one. So the problem here is, so the XYZ Corporation sells funds to small vendors, raising funds through borrowings from friends and investors, not deposits. Is XYZ engaged in banking? So no, XYZ is not engaged in quasi-banking, not banking. So under Section 4 of the General Banking Law, quasi-banks borrows funds through issuance, endorsement, or assignment with recourse or acceptance of deposit substitutes for relending, which is exactly what the XYZ does. Banking requires funds to come from deposits of 20 or more persons. Okay. Next, bar exam problem number two. So XYZ Bank allowed imposter to withdraw 2 million from Mr. Santos' account. So without verifying the signature against specimen file, XYZ claims it acted in good faith and could not inquire further without violating bank secrecy law. So is XYZ Bank liable? Yes. Banks must exercise utmost diligence. So higher than a good father of a family. Handling deposits. This includes verifying signatures and identities. The bank secrecy laws prohibit disclosure to third persons, not internal verification procedure. So good faith is not a defense. The duty is strict. XYZ's failure to verify the signature constitutes negligence and makes it liable for the unauthorized withdrawal. So banks must not have only ordinary diligence, but at least they must have extraordinary diligence in performing their task. So I guess this is the end of my presentation for the first part of uh, my report. So thank you so much and have a good day.